Good afternoon, everybody. Welcome to Trader Merlin Show. I'm back, and yes, I am feeling much better. Thank you. A couple days break, a little bit of recovery. My voice might still crackle every now and again, but beat that damn COVID yet again. So we got a lot to talk about today. Obviously, I got to do the month of April wrap up. I need to do the big story, which is obviously First Republic, which went under. And as we talked about, I think it was 3 weeks ago, I asked you guys when I was putting on those FRC trades, I said, what is the absolute worst case scenario thing that could happen to me on this trade? And we had a bunch of different answers. And the ultimate answer was the worst possible thing would be it goes into receivership by the FDIC, goes into bankruptcy, and the shares go to zero. Now, I didn't think that was going to happen, but as always goes with the trading world, you always have to think of what is the worst case scenario, what's the absolute worst, and then prepare for that, therefore you're never disappointed. And lo and behold, what happened is we had FRC go under, receivership was halted, done, so anybody who has FRC shares, kiss them goodbye. I have way too many shares of FRC. They're going to be absolutely worthless. After doing all the calculations of all the premium I collected over the past couple of months that I've been selling FRC premium, ended up being about a $27,000 loss on First Republic. So obviously a big kick to the teeth for me. I really didn't see this one coming, at least from the perspective of JPMorgan, Bank of America, and all those other banks putting in $30 billion to bail out FRC. And you're like, wait a minute, they wouldn't do that if they knew it was going to go under. However, to my pain, Jamie Dimon gets a laugh all the way to the bank. Here you have a picture of Jamie Dimon, AI generated, of course. For those who may not know, Jamie Dimon is the CEO of JPMorgan Chase, and JPMorgan Chase probably got the deal of a lifetime today. I wish that I had the capital to buy this one myself because they have one of the most screaming deals that you could possibly imagine. Notice Jamie Dimon with a nice smirk on his face and the First Republic tombstone over here that I had to generate with my horrible artistic skills. Oh, don't worry, Pepe. It's all part of the trading, man. We'll get it back in another way. As I mentioned, this was a small portion of the portfolio that was designed as a gamble prospect. So I knew going in this was super risky. I've had friends that are also in this trade. I said, it's incredibly risky. You sure you want to do this? And anybody who has FRC, it's not even worth the paper it is to wipe your butt with. That's how bad FRC is today. Anyway, so what did Jamie Dimon get out of this? First off, we know a couple months ago, or actually a couple weeks ago, they put in $30 billion. Jamie Dimon put in $5 billion of their own, $25 billion from Bank of America and the other banks. This deal is almost too good to be true, and you got to just shake your head because President Biden today is saying that this was an amazing deal. He's applauding the FDIC because you did something that prevented the taxpayers, you and I, from bailing out First Republic, which, okay, I'll give you that. That's true. We won't bail them out, although the fees to us down the road may be increasing to cover all the shortcomings that are now going to happen at the FDIC because there's billions and billions of dollars that they've had to pay out to cover all of these banks. But what exactly was the deal? Now, the numbers were fairly staggering. But anyway, one of the main reasons that First Republic went under was jumbo loans, right? Jumbo loans, which are just loans that are over $417,000. Believe it's $417,000 now. Is it considered a jumbo? Might be more than that. If my realtors in the audience, if I have realtor friends in the audience, let me know. I think when I bought my last house, it was $417,000 was the number for a jumbo. It's probably like 500 now, but somebody in chat will type in because I know we've got realtors in here. Yeah, Jamie got the deal of a lifetime, and he's literally got to be sitting at home right now firing up a cigar going, how dumb are these people? So here's what he got. He is basically assuming the portfolio of residential and commercial loans for FRC, First Republic Bank, which is a sizable portfolio. Now, to Big Eb's question is what happened to the $30 billion the other banks put into FRC? So first off, as part of this deal, Jamie Dimon and JPMorgan get their $5 billion back from that $30 billion, and the other $25 billion will be given back to those banks. So talk about an awesome deal. You put your money into an investment that was speculative as all hell, and it fails, and you get 100% of your money back. That's just crazy to me that you can do that on a bank level. Because if you and I were to buy into a speculative investment that went belly up days later, goodbye to all your money, right? No, in this deal, the FDIC said all that money has to go back to the original investors. So Jamie Dimon's like, this is awesome. We're buying it, and we get our money back. So I'm now getting back $5 billion, and the other 25 go back to the banks. I'm assuming their entire portfolio, I don't think it's the entire portfolio. There was some stuff that was left out, but the majority of the portfolio of jumbo loans, residential mortgages, and commercial loans. Here's where you got to just shake your head and go, are you kidding me? As part of the deal, the FDIC has said they will cover 80% of all the loans. So all those residential mortgages, all the commercial loans, all the loans that JP Morgan will be assuming from First Republic, they're going to cover 80% of any losses that stem from those accounts or from those loans. Now, by itself, that sounds awesome, but there's one big stipulation here that we need to know the answer to make a calculated decision on, was that a good move? And that is, how long are you going to guarantee those loans and pay 80% of any loss? 5 to 7 years. JP Morgan, if they keep those loans on their books and there's any problems with those loans over the next 5 to 7 years, the FDIC will pay for 80% of the losses. So think about this. If the market goes to hell in a handbasket, JP Morgan has an incredible backstop. 80% of all those loan losses are going to be paid for by the FDIC. So your downside is totally protected here if you're Jamie Dimon on this investment. But what happens if all of a sudden the market goes haywire, everything goes fantastic, and those loans just produce and produce and produce? JP Morgan reaps all the reward with basically a 20% downside risk on all of that paper. That is an absolutely smoking, unbelievable deal. They had to pay $10 billion for this, right? So they had to pay $10.6 billion to the FDIC in that auction process. But here's the part I just don't get. So I buy at auction First Republic and their assets for $10.6 billion that I give to the FDIC. The FDIC has also given me, the purchaser, a $50 billion line of credit to complete the deal, financing to complete the deal. So it doesn't make much sense, does it? If the deal was for $10.6 billion and the person that I'm buying it from is going to give me $50 billion worth of financing, this is like too good of a deal. It is absolutely unbelievable that this could possibly happen at that level. So JP Dimon and JP Morgan and Jamie Dimon, may as well just change his name to JP Dimon today, right? Got the deal of a lifetime. This may be better than, when they get Bear Stearns. I think that JP Morgan got Bear Stearns or Lehman Brothers, about one of the two, and that was a smoking deal. This far eclipses that. $50 billion in financing, and they had to buy it for $10.6 billion. So they're literally making $39.4 billion worth of credit on this loan, plus they got the original $5 billion back, plus they're capped at a 20% loss on all of the loans they assume from First Republic. I just shaking my head going, man, this is the deal of a lifetime. He came up big time. His salary is whatever, pretty significant. His bonuses this year are going to be off the chart. Absolutely unbelievable. Tom says in 5 to 7 years, those mortgages would be paid down a bit and the real estate would be appreciated. So there's even less risk. Exactly, Tom. That's the point I'm making. I'm saying worst case scenario for Jamie Dimon and JP Morgan is every one of those loans goes under and it's only going to cost them, 20% downside risk. Phenomenal. I don't know how they negotiated this. If it was, here's where I think crony capitalism is a problem in the United States, because we remember that Jamie Dimon was actually talking to Jerome Powell during this banking crisis. And I would not be a conspiracy theorist here to believe, and I think some of you may agree with me, that I kind of feel like this was orchestrated, right? Jamie Dimon was literally having conversations with Janet Yellen, Secretary of the Treasury, with Jerome Powell, probably even had some with the president as well, saying, hey, we'll be here if you need us for this and this and this, and let's make this happen and this deal, and I'll scratch my back, you scratch yours. And all of a sudden, Jamie Dimon and JP Morgan come out of this the absolute victor. Just phenomenal. What happens to underwater bonds they have on their balance sheet at FRC? So I couldn't find all that information out, Big Ab, but it's a great question. I believe that there were some loans that were not taken, and that may have been that faulty part of the portfolio. Not totally clear there. Do you think it's legal to have consumers pay $50 more per month for mortgages if they have higher credit scores? And where does the extra money go? It sounds like this is an epic ripoff. Yeah, Michael. So I read the article. I don't know all the details of it, but now they're saying those that have credit scores over 720 need to pay more to get mortgages, and those that are under 720, especially those that are under like 6 something, get discounts on their mortgages, which defeats the whole purpose of having a credit score. So I'll have to find out more information with regards to that. But that just seems stupid. Is it legal? They make the rules, so I would say sure, it's legal. But yeah, I think that's going to have to change. There's no way you should be rewarded for having poor credit. It's like, oh, well, those people have bad credit. They need a chance to buy a home. There's a reason they have bad credit. They're bad with money, right? It's the whole point of a credit score. Thanks, Pepe. I try my best. Obviously, I have a vested interest in this one because I had FRC shares, and that money, just kiss it goodbye. Don't dwell on it. Don't get frustrated with it. And again, I made the point several times over the past few weeks is this thing is the most dangerous security in the marketplace. And I said at any point it could go into receivership and go under. I didn't believe that it would because of that $30 billion bailout, but I was wrong and, caught me for some nice losses there, but it's not that big of a deal. Still got my health. Just lost a little bit of money along the way, but we'll get that back over time. It'll take me a while to get that back. No big deal. All right, so let me see here. What Big Eb, you said something there about NVIDIA. What did you say about Big NVIDIA? I'm scrolling back here to find a video. Don't feel bad. I sold puts on NVIDIA. Ooh, ay. It's tough because wait, you sold puts? You sold puts on NVIDIA this morning? Cool. You're lucky. Good for you. I thought you said you're buying puts. I'm like, you look at NVIDIA's chart here. Great. Sell those puts. Looks good. And I don't feel bad. I never feel bad. Ivan says, what happens to the short puts? Well, so my options expired Friday. So we know that they expired Friday. I had the 12. I had some 11s as well. Basically, because I sold those puts, I'm obligated to buy it at $12. At the time of trading, it was trading at $3.51. So those shares automatically were put to me. If you had put options for FRC expiring, let's say this Friday, then what's going to happen is whatever you sold your puts at, that's the price you're going to be exercised at. So if anybody here did, let's say, a $3 put, you're going to own those shares at $3. It's going to just show up in your account tomorrow. You did buy. I was going to say, if you sold those puts, Big Ab, you did good. You bought puts, huh? What do we say about NVIDIA? NVIDIA is making the most sought-after chip for the most in-demand technology that has happened in the last 40 years. That's artificial intelligence. It's the biggest topic du jour, and the best chip in the industry, leaps and bounds above anything else, is made by NVIDIA, which is why I told you guys, I'm not shorting NVIDIA. I won't short NVIDIA, even though this price looks so lofty. They are the juggernaut with the most important technological device for AI that you can possibly get. So, yeah, that's a tough one there. You bought puts near supply. I get it. You bought it in the top of that yellow range, but yeah, I'm staying away from it. My interests, my emotions, and my thoughts on NVIDIA would force me to make bad trades, I think. So I'm staying away from that one. Anyway, that was our Jamie Dimon talk. Quick, short, sweet, learning less along the way. I feel bad. I know we had an individual here who said they put all their money in FRC on that Wednesday show, and I just kind of hung my head in my hands and said, dude, that's straight gambling. And this, unfortunately, is what happened. That individual lost everything on that trade. I knew it going along that there was that risk, and I've been saying that to everybody here, that there is that risk with these, especially in the banking sector, and unfortunately, that one got me. All right, let me run through real quick what happened for the month. I like to always run through these ones, just so we can see, make sure I got the right numbers up here. Yeah, okay, so I'm going to start the end, and we obviously had the end of April go through, so let me make sure I change the wording on here, because I built this as we were going today, and I just didn't have a lot of time to get everything dialed in, so we will make this real quick adjustment. April. Okay, so let me run through just for the month of April so you guys can see what happened out there. How long have you been trading before you could mentally handle a loss like this? I would say that's a really good question, Pepper. I've had some traumatic. This isn't by no means the biggest loss I've ever taken. And I kind of knew that there was a high probability of this happening. So I went into this trade knowing that was a high probability potential that this is going to go into receivership of FDIC. So I already kind of set my mind to it that at some point I'm probably going to get caught on this. I thought it was going to go on for a few more weeks. It was the earnings announcement that killed the whole thing. But how long did it take for me to really get comfortable and take big losses? My real active trading career started in 1998. So I was trading in 96, but that was just nothing too aggressive. That was more long-term investing. In 98, most of my losses came from me just doing stupid things. And it was, little stuff, a couple grand here, a couple grand there, but nothing really big. The first real big one that got me was in 2000, I think it was 2001. It was the year the Mini Cooper came out. And it was bought by BMW, and Mini Cooper was making the BMW Mini Cooper. So I was working at a company in Italy, and it was actually Cisco. And I ended up losing $15,000 in one day trading an earnings announcement for Cisco. Cisco gapped down. They issued all kinds of forecasts for their market. Their numbers are going to be better and better and better next quarter, and huge revisions to the upside. All these analysts came out and upgraded it, yet it gapped down. And all day long, the market was moving up, and Cisco just kept drifting lower and lower and lower. So every time the market would start to rally, I'd buy another 1,000 shares of Cisco and another 1,000 shares of Cisco. I did this 15 times. So by the end of the day, I was in 15,000 shares of Cisco, where the market was up 2% on the day, but Cisco was just a straight opposite down periscope day, literally down to the last 10 seconds of the market. 3, 2, market sell, all 15,000, and lost about $15,000 in that day. That one took me a couple of months to recover from because I just felt defeated. I felt like I'd done everything right, but technically, when I look at my 10 laws here, I had done almost everything wrong. Right, I did almost everything wrong in that trade. So that one took me a while, but really, that was more of a psychological battle. The one that made me feel defeated was, I've had two really bad ones, and probably the worst one was Best Buy. Best Buy cost me 6 figures. So that was a $100,000 loss on Best Buy. And last year in 2020, I had about $67,000 loss on my put trade on the S&P. Those things take time. You just have to understand that, at least I had to understand that I was taking too much chances. I was putting too much on the line. I was getting a little too risky for those specific trades. I put everything, not everything, I put majority of what I had on Best Buy crashing because it's Best Buy. It's freaking Best Buy. They sell everything that I can literally go to Amazon and buy 20% cheaper. I'll walk through with my phone in Best Buy and just walk down the aisle and go, ooh, a new PlayStation 5. Great, click. Oh, let me get on Amazon delivered by the end of day for 20% less. That's to me what Amazon or Best Buy is the storefront for Amazon. Anyway, it was one of the biggest rallying stocks back in 2013, 2014. I can look at the price chart and tell you exactly when it was. But I guess when you have big losses like that, you have to regroup and figure out what was it that caused you to lose, right? What did you do fundamentally wrong? Which is why I always encourage you guys to write down your 10 laws. Maybe I should do a show again in the near future on what my 10 laws are. But all of those laws that I wrote down are the things that cost me the most money on any one specific trade. And I can point to every losing trade I've had. It's something on that list of 10 things that I commonly mess up with. So you should all write down your 10 laws. Make sure that you have a record of what cost you the most and focus on what caused you to lose like that and then move on. Know the process, trust the process. So I guess, Pepper, it's really about knowing that I was doing the right thing. I just kind of messed up at times. And every now and again, I'll take a flyer, I'll take a chance. This one on FRC had been working out for a while. It's been paying great. I literally got the absolute worst possible case scenario that could happen to you. In my life, and doing this since 1996, I have had 2 stocks that have gone into bankruptcy. 2. Ugh, unbelievable. Held them all the way to 0 like an idiot. Well, this one just was a surprise. Exodus Communications is the other one that I rode all the way to 0, and that was just plain stupidity and ignorance and denial. It can't go any lower. Next day, down another 10%, but it can't go down any lower. Next day, another 5%, all the way to 0. There you go. Okay, so Tom corrected me. NVIDIA does not make chips. They sell chips that were outsourced to Taiwan Semiconductor. Just a fun fact. There you go. Cool. All right. I'm with you on that one. But they take the chips and then they complete the whole unit that they're selling to you. Hey, my pleasure, Big Eb. I think that's the most important thing, is being transparent about it. What do you say there, Katie? Expert compartmentalization. I'm pretty good at that. Yes, I am very good at compartmentalization. All right, so let's look at the month of April here. Yeah, it's that H100. Do you know the motherboard? All right, I'll let you guys have that conversation. Yeah, let me run through the month of April just so we can knock that out, and then we'll go into overall markets for today. For the month of April, I usually start at the bottom, work our way to the top. April was really about the B to the T to the C. Bitcoin up 2.67%. Now, today, as you probably have noticed, Bitcoin giving back a lot of that. Here is the chart of Bitcoin. This is a daily. I decided not to do a monthly, but just over a daily, you can see a great run up for the month of April, although somewhat muted. It looks better than it actually was. 2.67% to the upside there made Bitcoin your number one. Number two on that list is going to be the Dow Jones Industrial Average. Okay, the diamonds. I will just do the DIA here so you can see that one. And really, the gains there coming predominantly from that Thursday and Friday trading session. Just two huge days that vaulted it up into positive territory. Otherwise, we may have seen a down move for the month of April on the Dow Jones Industrial Average. That was your number two. Number three, S&P 500, 1.6%. Here's your SPY for the month. Again, most of these indexes were very close to break even, if not negative, except for Thursday and Friday of last week. I guess I don't do a show and I stay in bed for a couple of days and all of a sudden markets just rip. Gotta love that one. Moving on. Let's go to the fourth place medal, short of the podium. That's actually not correct. Let me correct this one real quick because I forgot in editing this thing out. That should actually not be negative. That should be a positive sign. And there's your oil up 1.47%. And we've got gold at 0.86. So let me just do both of those at the same time. Here is, let's go to crude oil all the way to the top for CL. Today down 1.46%. Came really down, really close to that yellow demand zone I've got mapped out here. We looked at that one a couple weeks ago. Thought it was going to close this gap, which it did on Wednesday. Thought maybe we get a little bit deeper into that demand zone down around 72.80 to 73.60. We're close, but not quite there. Let's see. And then I had gold, GLD. Not a lot of interesting stuff happening with gold. I don't know why we have these lines on here, so I'll get rid of those. Remove some of the old stuff. Out with the old, in with the new. And there we go. So gold down today pretty heftily, down around 0.35%. Nice big red candle, even though it gapped up over the weekend, showing down 0.35% of the day, but really sideways for most of the month, and that gave it a 0.86% gain for the month of April. And I've got two left on here, the NASDAQ 100, and then the loser by a large margin, Russell 2000, down 1.79%. So I guess my article that was written mid-month for barchart.com was somewhat on. So let's look at IWM, which is our worst performer there. Again, it had a similar fate with the Thursday and Friday session of last week. We had the nice big rally. And now it's got kind of an interesting picture. So, you have this unfilled gap for those who might be new to technical analysis. I know we've got some newbies in here. This difference between, and how did we get to a red box? Let me change my defaults here to a yellow box. I think that's kind of yellow. That gap between the market price on the 24th of April, Monday, and the gap down on the 25th of April, that was an unfilled gap. It never really rallied back up there except till today. So today you have this long topping tail. Things just shot up, gave it a nice spike up to the top of that zone. And now today, you notice this Russell 2000 has my favorite pattern. And there's a couple of factors to this I think might make it a really good opportunity for people tomorrow, which was you had a sharp retracement, these two big green candles here off the low that happened on Wednesday, the 26th of April. We have that nice big rally up, topping tail today. Keep your eye open for tomorrow. And again, I'll draw the candlesticks the way I like to draw them. Here's that red line at 174.76. If we open up anywhere in the range of this yellow box, or anywhere above that red line, really, tomorrow, and start drifting lower, I think you got a pretty good chance that you're going to have some more downside market movement. And that is just because we've been kind of trending down. Yeah, we had a little rally up for the month of from mid-March to mid-April, but it's still making lower highs, which is key here. You have a topping tail, which shows negativity, and let's see if we get some follow through. So tomorrow might be a great day for anybody looking to short the Russell 2000. And lastly, the NQ. So the big stuff happened last week with regards to earnings announcements, right? That really is what saved the NASDAQ. You had Google, you had Amazon, you had Microsoft. This week we have Apple on Thursday. So a big catalyst there, keeping the NASDAQ in that positive territory for the month of April. But today, you've got a spinning top formation. A lot of people also feel that is a reversal. You could treat this exactly the same. I put a line right across the lows of today, which on the NASDAQ futures is 13,257. If we start to drift lower and break down below 13,257, you might have yourself a nice short trade on here. Of course, we are coming into some very, very interesting times, given the fact that on Wednesday, Jerome Powell will be giving the FOMC's decision on rates. Now, I've been clinging to and saying I am sticking to a 25 basis point increase, which has been slowly shifting. Right now, it looks to be about a 94% probability that we're going to see a 25 basis point increase on Wednesday in that Fed funds futures, which has been slowly getting more and more solidified at 25 basis points. You can see here a month ago there was a 48% chance. I've been saying 25 for a while. I don't see them stopping yet. Now, what is important? Notice right here that they're expecting 25 basis points to jump from 5 to 5.25. If we look at the June 14th meeting, which will be the next one after Wednesday, right now there is a 65% chance that they're going to pause and no longer be raising rates. Now that will be the big discussion for the next 6 to 8 weeks, actually 6 weeks, will be, are we going to pause, right? I'm kind of in the camp of yes, I do think you're going to see a pause. It's either going to be a pause or it's going to be a 25 basis point increase, but the economic data that's going to come out is what really is going to help us determine that for the next meeting. But right now, I think that they'll start to slow down. You may remember at the press conference that Jerome Powell gave last time, he said, most of us have come to a consensus that by the end of the year, we'll be at 5.1%. So that would be, if they raise 25 basis points on Wednesday, that means they have to drop 15 basis points to get to their objective that they stated at the last FOMC meeting. So we'll talk more about that tomorrow. Obviously, the big news is going to be what is said at the press conference after that meeting. What else did I have? I think I had some questions that came through. Let me see here real quick. I didn't change the font on this one. I just didn't have time today, so I apologize for the very small print on this screen, but luckily, I have the power, the skill, and the wherewithal to pop that up right now and make it, how about we go Control A, and we will make this, let's go 30. There you go. That's a little bit better. I'm hearing talk about the upcoming commercial property market problem. Can you elaborate on the situation? Well, this is something we talked about a couple weeks ago, Les, which was, I said the next big shoe to drop for me is going to be commercial real estate. You look at the vacancy rates for San Francisco, or just be honest, the outright awful situation going on in San Francisco. Like, I wouldn't want to live in San Francisco. I apologize for those of you who say they live there. I used to love San Francisco, and now it just seems like lawlessness and filth going on in San Francisco with regards to the streets. Anyway. I forgot the last number. I think when I showed you guys a couple weeks ago, it was like 38% vacancy rate for commercial real estate buildings. That means people just aren't going into the city anymore. So that's obviously going to start to have a serious economic toll. We have a lot of people working remotely, which of course is having an impact on that. But still having that kind of vacancy is going to be a huge problem. So Les, one of the talking points I made, I don't remember when I said this, was 2 or 3 weeks ago, was if you're smart, which is going to be, you have to be good at this stuff. I'm not good at this at all. Look at the banks that are heavily involved in commercial real estate. Now, First Republic is all, San Francisco-based bank. They may have had a pretty large exposure to commercial real estate, but the FDIC just backstopped that whole portfolio, which is why I'm just adamant that Jamie Dimon got the deal of a lifetime here. There's other banks that I think are going to start to show, cracks in the armor, if you will, simply because they're heavily invested or issued a lot of commercial real estate loans. And as businesses default on that, you could see that start to bring down the GDP data, the economic data, and then all of a sudden we find ourselves in another bad situation. So I think that that's the big wild card, at least it's not even a black swan anymore because people are talking about it. It just seems to me that is the highest probability of the pain point in the marketplace. Our unemployment numbers are fine. GDP's not great, but it's not atrocious. Inflation's been dropping, so that's starting to look better. So a lot of the economic data is pointing us in the right direction. So you have to ask, what's the next piece that could really drag us down? Defaulting on these mortgages would certainly, or these loans, commercial real estate loans, would certainly be the big one. So I just not good enough to go into these balance statements of these banks and look and see what their exposure is. Some of you probably are good at that. And if you are, let me know. Email me and keep me updated so I can share the wealth. Let's see. So this was the other question that came through. Let me get this one up here and make the font much bigger. Control A. Okay, so here is the next question. Also from Les. He gave me with a twofer today. He says, if puts are in the money, they will be assigned at expiration. But if the stock is not trading, how can you get assigned? You'll get assigned at the price that that your puts were, their strike price was for. So, for example, I told you I had 40 FRC puts. I'd sold 40 puts. So, doesn't matter what happens to FRC from here on out. It's below $12. I'm going to get exercised at $12. Period. If you have them, again, you're holding those now and they expire next week, next month, next year, well, you're going to, since it's going to go to zero and be nothing, you're going to put those shares at the price that you sold those puts for. If it's anything above zero, if you sold a put for $1 on FRC, you now own FRC at $1. It'll pop in your account. I don't know how long that process takes, but it'll pop in your account. Isn't Wells Fargo supposed to have relatively heavy concentration of commercial real estate loans as compared to other banks? I'm not sure about that, Liz. When I was digging, it looked like it actually looked like JPMorgan had some pretty big exposure. It looked like Huntington Bank shares had a lot of commercial exposure, but I'm seeing conflicting information, so I didn't want to convey that not knowing the full story. Yeah, I just don't know that information, and I haven't had the time to dig deep into it. Got too many other things going on. But kind of think FOMC may not damage my rut at SP yellow boxes. No new wars, printing, bad policies, new ones, riots, etc. Just smoldering problems. Correct. I don't think there's anything big on the horizon right now that's just looking horrible. The commercial real estate could be that big piece, though. And again, that'll take a little bit of time to come to fruition. Let's see. And that was it. That was it I had for questions, I think, right? Yep. Running through, just making sure I got all the questions answered. And all right, I think I got it. Now I just got to figure out where I put the earnings calendar and economic calendars for you guys for tomorrow. I had it all worked out. It was all perfect. I thought I was going to be back in the saddle with a vengeance today. No, I still messed up. All right, let's go to the end here just so I can get this economic calendar stuff out of the way, and then we can go into whatever questions you guys have. All right, so here's what's cooking for tomorrow. Your economic calendar for the 2nd of May brings you some decent news for the U.S. You have the JOLTS job opening, so we have some jobs data. You have factory orders, and then Ward's total vehicle sales. I don't particularly follow the Ward's numbers very much, but I'm going to start focusing on it because, as I mentioned, I think what's going to happen is you're going to start to see inventory buildups in dealers. So sales declining, inventory buildup would lead to lower prices for vehicles, which may make for a great opportunity here going forward for someone looking to buy a vehicle. But I think that's probably going to take till probably the 3rd to 4th quarter of this year where we start to see the inventory numbers build up, and then you get some great sales for the end of the other news. Tomorrow, you have a lot of manufacturing numbers coming out. You've got manufacturing numbers for the European Union. That's going to be Italy and Spain and France as well individually. You also have the British pound coming out with manufacturing PMI numbers, and that will do it for the economic data. Now, you look at the earnings calendar for tomorrow. Oh, we have some recognizable names here. Advanced Micro Devices, AMD. Actually, let me start with the BMO first. That's before market open. So right before you guys even start trading in the morning, at least from the opening bell, you'll have BP has reported, Pfizer will have reported, Enterprise Product Partners will have reported, as well as Marathon Petroleum. And then some bigger names after hours. You have Advanced Micro Devices, you've got Ford, you've got Starbucks will be another good one. Chesapeake Energy, so for those of you in the natural gas trade, which has been kind of a dead duck here for the past month, but falling steadily over the past year, Chesapeake Energy, big in the natural gas space. You also have Energy Transfer Partners will be reporting earnings after market close tomorrow. Yep, Starbucks and AMD. Ismos, yeah, you got that one. Apple earnings Thursday p.m. could cause big moves. Not only could it, I think it will. It's the only big one that's happening this week. Of course, Microsoft is actually a bigger component of the NASDAQ now than Apple is. That number may change as of Thursday, but yeah, anytime you have those heavy hitters, it can cause significant waves in the broader market. Now, one thing was interesting, and I'm quoting just an article I read. I want to make sure I get the facts straight, but it was something like the Apple, Microsoft, Nvidia, and I want to say Amazon accounted for 60% of the market's gains this year. 60% of the S&P 500's gains this year. I'll find a graphic and show you guys, because to me that was just an absolutely just mind-boggling statistic that these four companies accounted for 60% of the gains of the S&P 500 since the beginning of the year. That's crazy. What it means is we should focus on what those four companies are, because if they start to have bad days, those four companies can also bring the markets down very, very quickly. All right, let's see. Alan says, speaking of natural gas, thoughts on states legalizing gas such as New York? I don't know. Don't know about that one, Alan. What's on my shirt? For some reason, just maybe it's like the stupid college kid in my head. I collect beer shirts from different countries I go to. So what this was, Tiger Beer. I love Tiger Beer. Tiger Beer, I think I got that one in either in Thailand or Vietnam. Might have been Vietnam. But yeah, just a beer shirt. I collect beer shirts. I collect pint glasses. Yeah. I collect things, right? I'm like Tyrion Lannister. He drinks and knows things. I just collect things. Let me see. What other last minute questions you guys have for me? Let's see if you got some, type them on in here, because I'll just kind of wrap things up here a little bit early. Oh, let me tell you a little bit about the schedule for this week. We have some good stuff. So one thing that's not bothered me, I think that might be the wrong word to say. But one thing I find interesting in the world of investments and finance is all of us, every single one of you, without question, has been told, save, invest, earn, save, invest. Do that your entire life and you'll be okay at retirement. That's so stupid, because you could have $1 million at retirement, but that doesn't necessarily mean that you can live through retirement based off of those numbers, right? So tomorrow I'm going to have Justin Krebs on the program again, and we're going to talk about determining how much money you need at retirement. Like how do I calculate out what number, either whether that's an actual physical number or how much money I need per month during retirement to enjoy those years, right? If you got $100,000 or $1 million or $10 million, just the number itself doesn't help you at all. It's about calculating out your rate of return that you need to sustain your life as long as you want. And I think it's an exercise that those of you who are long away from retirement should do. The sooner you do it, the better. One thing, when I took the strategic investor class at Online Trading Academy, which I love it. I think it was it's just a fantastic class to help you understand where you stand financially and how to achieve those goals. But one of the things they did the first day is we were sitting in class, and the teacher at the time, Len Ostrowski, was actually teaching it. Rest in peace, Len. Len says, what rate of return do you need starting today to achieve your financial goals of retirement and live the life you want during retirement? And I way overshot my number. I was actually pretty surprised. I said, I gave a percentage. And then it's about sitting down and running the numbers. Now, we're not going to run all those numbers, okay? It's just about setting the understanding of what numbers we should be looking at. But when I ran the numbers, my rate of return that I needed annually from here to retirement was significantly lower than what I thought it was going to be. Now that I have the numbers in my head and have a goal in mind, it's much easier for me to achieve those targets. So that's what we'll talk about with Justin tomorrow is, how do we establish what the numbers are and the different variables that you might want to account for when you calculate your own number. And again, we're all going to be different. Did you receive them from others who travel to those places? No. I'm not a believer in that. I believe if I've been there, it's my souvenir thing. So for example, I don't know if Chris Collins is here today. He probably isn't. He usually says hi when he shows up. But Kevin Collins, Chris's older brother, their mom collected, I think it was spoons from different places. So she had this little placard in her house that had all these little spoons on it. I like pint glasses because you can stack them. So in one shelf, I can fit 50 glasses where you could probably get, maybe 5 or 6. I can just stack them up. So I have, they're 4 wide, 5 wide. So 5, it's three deep, so that's 15. So each level is 15, and I can probably do 6 levels in there. So I can get close to 70 to 80 pint glasses on this shelf. Maybe it's Singapore, and I got it in Singapore, Big M. So yeah, I just collect them, and I think it's kind of it's my memento of places I've been. I'll just look at a pint glass and go, oh yeah, I remember. Talk to people who are close to me. I have a memory problem. I knock on wood. I hope it's not early onset Alzheimer's. Hey, there he is. Well, didn't your mom collect spoons or thimbles? I remember the entryway to your house. There were like these little placards on the wall that had, it was either thimbles or I thought they were little spoons, like little tiny mixing teaspoons. Yeah, I thought I could have sworn that's what it was. But yeah, that's my thing is pint glasses. Pint glasses are really my main one. But now all these foo-foo breweries don't carry pint glasses anymore. Yeah, what is chicken stuff? No, just chickens. Petaluma, where Chris and I grew up, was the chicken capital of the world. And I think they sold that. And then it was the wrist wrestling capital of the world. And who knows what they are now. Merlin, can you bring on John O'Donnell so we can talk about debt ceiling, how the U.S. economy is doing? So there were spoons. I knew it, Chris. My memory's still somewhat solid there. So we're talking about guests. I'm going to have Justin Krebs on tomorrow talking about determining what number you need during retirement, how to get there. On Wednesday, I'm going to have John O'Donnell on the program. And if I can wing it, if his schedule frees up, I'm going to try to Bill Addis on Thursday talking about the Fed. We have to update what's going on with the I-bonds. Of course, that rate's dropped sharply, right, from 6.89. Now I think it's going to be, 4.3 or 4.4 is the number that you're going to get now for your new I-bonds. We'll also talk about some of the other things going on at the Fed with Bill Addis. But Bill Addis is not confirmed for Thursday. I'm going to try to get there. Can you show us your gold coins? I can't. Mine are all in safe deposit box, locked away. So I might have 1 or 2 lying around here, but they're just nothing special. 1/10 of an ounce gold coins, 1 ounce gold coins. I have some old, very classic ones from like the 1880s, which are cool, but those are all in safe deposit box. All right, I think that's going to do it. So thank you guys very much. Hope you enjoyed today. I'm glad I could be back. Sorry I missed Thursday and Friday. I had to do what I had to do. Surprisingly, this COVID was a very short, not very painful one. Just really felt extremely fatigued. I still feel fatigued, but I didn't have any of the real major issues I did with the last couple times I got COVID. Thank you, Fish, for giving me COVID a second time. Or actually, a third time. But I got twice from Fish. All right, everybody, that's going to do it for me. I hope you enjoyed today's show. If you have any comments, questions, feedback, I do have some time this afternoon to go through the videos and look at the comments you guys have posted. So I appreciate the YouTube comments. You can email me at TraderMerlin@gmail.com. Tomorrow, again, we're going to have Justin Krebs talking about long-term investments, retirement, and more importantly, figuring out exactly what you should have in your retirement that fits you. And I think what we'll do is we'll probably do it very high level. I'm going to try to make it where it's kind of step by step. So you guys can all sit down after the show or during the show and write down your numbers and figure out what your goal and target and objectives are so you can retire the way that you want to. I'll see you guys tomorrow. Take care, everybody.